Hello and welcome to ET Now. I'm Ashwin Mohan and you're watching Amicus Curiae, your weekly guide towards brewing in the world of corporate law, tax and regulatory affairs. And this week, we take a closer look at market regulator Sebi's move to provide a fillip to domestic listing of startups. But before we move into that discussion, let's take a quick look at the headlines this week. The Bombay High Court has directed the government to clarify its stance on the controversial levy of MAT or minimum alternate tax while hearing an appeal filed by European fund house Aberdeen Asset Management. The earlier interim relief provided to Aberdeen will continue till the next hearing. Market regulator Sebi expects the proposed merger of commodities regulator FMC with it to be completed by September end and has assured that there will be no layoffs after the amalgamation. The Delhi High Court has held that public sector banks should disclose details of cases pertaining to persons and establishments whose bad debt of over 100 crore rupees have been written off. According to The Hindu, the Income Tax Department may soon begin a process to transfer all refunds directly to bank accounts of the individual's choice in a bid to simplify the refund regime. This week on Amicus Curiae, we take a closer look, as we told you earlier, at Sebi's move to provide a fillip to domestic listing of startups as well as e-commerce companies. What are the implications of this new regime? Is it flexible enough? And is it attractive enough for both the startup community as well as investors? To throw more light on that front, we are joined by two very special guests this week. Anupam Mittal, CEO and founder of People Group, which owns businesses like Shaadi.com and Makan.com. And from the advisory world, we have Ajay Garg, MD of investment banking firm Equirus Capital. Gentlemen, thank you so much for taking out time and joining us on Amicus Curiae this week. Anupam, let's start off with you. You represent the industry, and of course the industry has been waiting for some sort of a regulatory incentive to perhaps not be distracted by overseas jurisdictions and consider listing in India. Do you think market regulator Sebi's move is perhaps too little too late?
Well, I wouldn't say it's too late, but in my view, it's certainly too little.
All right.
I think it's a good signal, but I think there's more to be done. I think there's a lot more that goes into simply listing norms. Listing norms come into play when a company has sort of at a point that, sure, it does open up the opportunity to certain companies that may not have been able to list by providing opportunities like that. But from my experience and basically talking to private equity investors and pipe investors who invest in public markets, liquidity is a major concern. Even mutual funds will almost always invest in the main stock exchange. So if this had been sort of easing of listing norms on the main stock exchange for a certain type of startup like the Jobs Act did in the US,
absolutely,
I think I would have seen it as a much more welcome move than simply creating an institutional trading platform which keeps a certain type of company there.
All right, Anupam, point taken. Ajay, do you agree with Anupam? Because he's clearly of the opinion that an exclusive trading platform is perhaps not the need of the hour. Why not give startups and other companies, start-off capital, the opportunity to list on the main platform? What are your thoughts on this front?
So I think it's a debate. And obviously, there's a liquidity on the main platform, but you also have 8,500 stocks to pick up from the main platform. And given that there's a lot of existing regulations in the main platform, which makes it harder for startups, specifically the end-use restrictions and so many other clauses which were sort of, affecting IPOs were only focused on building brands or building consumer. I think what Sebi has done is a step in that right direction. I think we have to also understand that, a capital market, there are various players who have to make the things happen. And I think from Sebi's perspective, I think they have taken the right steps. Obviously, I agree with Anupam's view that you need to do much more than just depending upon Sebi to take care of everything else.
Anupam, one of the aspects that is part of the new provisions of Sebi is the fact that the minimum amount that needs to be put in by an investor should be 10 lakh rupees. So you have this aspect. You also have a separate alternate trading platform. What does this tell you about the market regulator's intention? Because clearly what the market regulator has been trying to do is that it has been trying to give incentives domestically so that there's no flight of capital abroad.
I have no doubt that the intention of the market regulator are very firmly placed in the right direction. And that's a very good sign because obviously, this is coming from the finance ministry and so on. So we know right to the top that these are things that are sort of, being seen very correctly. Now, having said that, the 5 lakh number or the 10 lakh number or the 8 lakh, look, I'm no capital market expert. So it's very hard for me to say whether 5 lakhs is the right number or 10 lakhs is the right number. Personally, though, I feel that, and one needs to define startups, but if you ask me, startups really shouldn't be listing. Right? Or let me change that by saying early stage companies really shouldn't be listing.
Because they go through various stages of fundraising. There's a long cycle, right?
Absolutely. And especially in platforms that don't have enough liquidity. And today, because suddenly early stage investing has become very sexy, a few companies have broken through and made 1000x returns for the investors, everybody's running to invest in these companies. But as soon as you start going through a trough, a lot of these companies who are listed on these trading platforms, I worry that will they sort of end up going sideways. The bigger point is, can we enable the companies that are not early stage anymore, which have become large, which may not have profitability, but have become very real
high growth, mature companies.
High growth, mature companies, maybe not profitable. How do we make it easy for them to list on the main stock exchange? And I think that's the bigger question that Sebi should be addressing, to really bring the technology companies front and center into the mainstream capital markets in India.
All right, fair point. 2 questions to you, Ajay. One is, of course, about the fact that he believes that there is a substantial risk element if it's an early stage company that is willing to go ahead and list on the platform. And secondly, he also spoke about the fact that there are 2 kinds of companies, the early stage companies and of course the mature high growth companies. How does Sebi make it easier for them to list on the main platform? If you could throw some light on those 2 aspects.
If you reflect on the capital market history of India, it has always been a startup platform. At a concept level, if you think about, entrepreneurs like Reliance, when they got listed at par, it was a startup capital which the capital market gave. Infosys, again at a very early stage of their evolution, they came out. HDFC Bank. There are enough examples if you think the way capital market.
But there was a certain degree of business sustainability in those models.
They were when they came at that point in time, they were very early stage in their evolution. Or in some cases, you've also seen a lot of cases where, for example, even when the Reliance Power IPO happened, it was again a startup IPO only in a context of it. So the capital market.
And look at what's happened to power IPOs after that.
So, I think equity is a risky product, So obviously that's the whole thing. So I think point I'm making is that I think the capital market in India is far deeper than generally what is, I think, what I've heard from Anupam's conversation. There's a big appetite, and the equity culture is pretty strong. We have seen at a retail and HNI participation also pretty ability to take that type of risk. At the same point of time, coming to your question whether it's a 5 lakh or 10 lakh, I think.
So do you think that amount needs to be tinkered with, or is that fine?
I think that's fine.
Okay.
Because, I think Sebi really wants to keep it only for qualified investors, and he wants, certain class of people to play with this. So I think that's fine.
But one of the comments I do have, I think, Ajay makes a great point that, look, a lot of the companies that came in earlier were startups, Infosys certainly, Reliance certainly, and they made incredible wealth for the citizens of this country, and that's remarkable, I think. And I don't think that trend should stop. Having said that, though, I think times have changed. When these companies went IPO, really there was no appetite for private equity players in India. Today, startup capital is available in abundance for these companies, and that's exactly the kind of companies that should be funding startups.
But Anupam, old timers will come back and tell you that that they grew up in an era where companies were driven by profits, and today we're in an era where companies are driven by valuations. So that's the difference.
And I think that's right. I think it's absolutely right, because when they were building companies, and that's the change that's happened, because they had profitability, going and listing on these exchanging and growing over 20 years made sense. But today, when there's disruption opportunity available, when you can dismantle entire industries in a couple of years, do you really want to take 20 years and grow profitably to sort of become a multi-billion-dollar company from $100 million listing maybe? So probably that's not the best template.
Ajay, you spoke about the fact that the system that has been set up by Sebi is not perfect. What are some of the missing pieces in the puzzle? What else would you have liked to see in the provisions?
So from Sebi's point of view, I think they have tried to simplify the regulation a lot. I think what really will drive any participation is what sort of liquidity and what sort of participation from long-term investors are there besides HNI and I think there's no clarity on the institutional. But I think it will be over a period of time. As Sebi themselves can't really bring investors, that will be the job of the attractiveness of the company and the bankers to figure out the right sources of capital for that perspective. So I would sort of, give them whatever they could do, they have done.
On that note, we'll have to slip into a short break. Stay tuned to ET Now and keep watching Amicus Curiae. Welcome back to Amicus Curiae. Ajay, let's now talk about the tax perspective as far as the new regime set up by Sebi is concerned. Now, many people believe that even though what Sebi has done is definitely positive, in the absence of any tax incentive, startups will still be attracted to list overseas because of the valuation concerns. What needs to be done from a regulatory perspective as far as taxes are concerned?
I don't think this move will have any impact on valuation per se. I think on the tax front, there's obviously this, as Anupam also briefly mentioned, that there's an intent at the regulator, from the capital market point of view. Then you have a tax department which will take a different view, and we have seen that happen in a couple of cases when AIF, we still continue to debate in terms of how the Sebi was looking at it and how the tax department.
Even REITs, real estate investment.
Even REITs looking at that, or even the intent to always promote startup, but then you have this income tax rule where if you are raising money from domestic investor and they are not participating from a venture part of a venture capital or an angel investment network, then the fair value above which they invest, they will have to pay tax on that.
Anupam, what kind of a tax incentive would you want as a startup? You have your fingers in several interesting companies. What would you like to be there on the ground as far as the tax concessions are concerned to make it even more attractive?
Ashwin, to be honest with you, I'd just be happy if we didn't have these sort of regressive and retroactive sort of tax impositions that happen. Forget the incentive. I don't think we as entrepreneurs want tax incentives. We're happy to pay our taxes if applicable. But
all you want is certainty.
Absolutely.
We want certainty and we want fairness. Different departments taking different view and not having clarity, and then having regressive steps like imposing startup tax because you feel that somebody is going to take advantage of that and therefore penalizing the entire ecosystem. These are highly regressive steps. I think this comes from a sort of very old hangover that we have in this country that entrepreneurs are essentially crooks and therefore they need to be watched very carefully. And today, the view that needs to be taken is that entrepreneurs are essentially doing the right thing, and there are exceptions that will always be there in any ecosystem.
Absolutely.
And those are the ones we need to go after, and so we need to administer through exception, not by generalization. Today, as an entrepreneur, if I want to send some marketing money out of this country, it takes 40 signatures. It takes me 10% of my time to do all kinds of compliance as far as these institutions are concerned. But forget sending money outside. It takes me days to get money inside, right? And money can be stuck in banks for days. Different banks have different rules. Clarity is not there. Everybody wants different documentations. And so I think we really need to step back and really change the mindset in terms of how we think about our entrepreneurs and the ecosystem.
But I think a lot of startups which we have normally seen do get lost with this whole TDS and advanced tax, which is again, a lot of capital also, if there's a TDS, a lot of capital does get blocked for them.
Yeah, absolutely.
And I think you have to think through that data point on that.
Now let's look at the timeline, because that's another interesting aspect that has been included in Sebi's new regime, and that's the listing time for companies, which has been cut from 12 days from the date of the IPO to 6 days. How will this move help streamline the process? You're a banker, Ajay, tell us.
So, I think you've seen volatility in the stock market. Okay, every day there's a different view on the market. So 12 days and the stock is only trading after 12 days, then that much price views have changed. So that sort of, adds to the risk of investing 12 days prior to when the listing will happen. And when people are investing in public markets, they are obviously looking at trying to have liquidity in their option and when they're investing in that situation. So I think streamlining this will bring down the cost, will bring down the uncertainty in terms of what the issue price, what the listing price would be vis-a-vis issue price, because it will be much closer to the market environment in which the issue was priced at, rather than 12 days from where it was priced at. So I think that's
that's definitely going to help.
Absolutely.
So overall, do you see a flurry of IPOs happening now once these laws become effective?
So see, I think I would say that even in case the main board, last year we have only had something like close to 12 issues or 15 issues that have got done since that capital market activity happened in the last, since June. So IPO is not something which, every company could potentially do it, because firms like us and every other investment bank, we're pretty selective in terms of what sort of deals we would really like to take to the market. And I think that would be the way to look at it. And IPO shouldn't be seen as there's a lot of flurry. There will be a few deals that have happened, but it should be quality deals, and investors should make money on those deals.
Absolutely, quality being the keyword over there. Anupam, how do you see your peers? Do you see many of them grabbing this opportunity that has been offered by Sebi? It is an outlet.
You've got large companies which have gone beyond the maturity curve, are still high growth companies, which are centered around the Indian markets primarily, right? So local brands, so whether it's Ola, whether it's Shaadi.com, one of our own companies, or other such companies, it makes a lot of sense for these companies to be listing within India as long as the regulatory environment is very friendly.
It's a case-to-case basis, clearly.
Yeah, and by that I don't just mean Sebi, I mean all the other departments that we spoke about.
Right.
However, having said that, I think these companies will list on the main stock exchange and not an ITP platform. And then you're left with early stage companies, startups that potentially have taken VC money, or some that have been bootstrapped and not taken VC monies, that are small to medium and are at a stage where they need to provide an exit to the investors, for example. I think this is a great option for them. Right? And I think many of them will take advantage of this. But that's the only segment that I see personally that this is something that's going to work out well for.
All right, Anupam. So clearly our panel is of the opinion that as far as the new route offered by Sebi is concerned, there will not be a flurry of IPOs. And of course, the pool of e-commerce companies or startup companies that will be attracted to this platform may not be as big as we think it is. On that note, we'll slip into a short break once again. Closing comments on the other side of Amicus Curiae. Stay tuned to ET Now. Welcome back to Amicus Curiae. Ajay, in the previous segment, Anupam spoke about the fact that perhaps it will only be a limited set of investors in the startup and e-commerce community that would be attracted to list on the alternate capital raising platform of Sebi. Give us a sense, you've been involved with several IPOs in the past. What's the kind of market cap range of companies who you think would be best suited for this new platform?
If you look at US listing and above, generally it will be given the cost and given the visibility and all the effort required in doing something like that. Companies which are $7 to $8 billion and above will be the companies who would be targeting that. At the main board exchange, generally we say, companies which are closer to $300 million to $3-4 billion is something which generally targets that type of a market. Companies that are $200 million and up to maybe $30 million is the companies who would be mostly targeting this exchange. Is the way I look at it in terms of market cap size.
What can the government do overall to create a more established investor ground in India?
We have seen in a couple of deals, Ratan Tata himself investing in those situations. So there's this existing ecosystem of people who have that wealth, which they cannot invest outside of India, and they have made over the last 2 years of 2 decades of liberalization, the wealth has got created. That capital is already sitting in this country.
All right.
And that will be obviously some part of the capital will get allocated to risk investments that we already seen in what has happened in the angel network. Have we seen happen in the early stage investment that's been happening around it?
So do you see more investors, in fact, being attracted now that these rules will soon become reality?
They made it easier, yeah. They made it easier because it's more tax friendly. Listed company, you don't have to pay taxes on your exit. So, all those.
Is that going to apply in this ITP's
Absolutely,
case?
Yeah,
that could be
So
interesting.
do you see more investor interest in some of the startup companies and e-commerce companies now that this option has been provided by market regulator Sebi?
Well, it remains to be seen how many companies end up here. If there is a handful of companies that end up here and the macro sort of trend stays consistent, then there will be some interest. But we know that early stage investing is very risky and there's a lot of troughs and peaks that it goes through. So you're bound to see some of those, and it'll be very interesting to see how much of that dries up when that happens. So I think we need a couple of years of consistent sort of growth and a handful of these companies coming on this exchange for it to become a very viable investment platform for HNIs and family offices. So in other words, what I'm saying is we need to establish that track record. It's too early to say whether it's going to work or no, because as soon as we hit a trough, and that could happen any time in the next couple of years, if it happens before we are able to build any sort of liquidity and volume on this platform, we'll struggle. But if we manage to build some momentum, we might sail through that trough.
All right, so clearly time will tell. Ajay, on the valuation bit, critics argue that some of the e-commerce companies and startups are commanding ridiculously high valuations, all right, and that they're not profit-driven. How do you think this entire exercise by Sebi, of course, makes capital raising a little more easier and a little more flexible? What impact do you think it will have on the valuations of these companies? Because that, of course, at the end of the day is key.
One has to see. It's not easy to assume that what you used to get in terms of those liquidity preference driven deals, and the same will apply here. But this will be a much more robust valuation, and I think business will obviously have the ability to see attractiveness on the price would only drive the valuation subsequently, and I think that's how we think about it.
Anupam, how do you think industry players like you will ensure that the valuations are realistic, if at all you look at listing?
Look, I always say, right, Ashwin, I would love to, as an entrepreneur, determine valuation, right? But entrepreneurs don't determine valuation, right? Neither do bankers. Valuation is driven by demand and supply. If you've got 5 investors chasing you to put money in your company, sure, you can tell them what your valuation is. But if you've only got one guy willing to give you money, he's going to determine what the valuation is. So valuation is something that the market determines. If you're a very sexy company that lists on this exchange, and 1 of 10, which is really sexy with a very well-known brand and so on and good track record, I'm pretty sure you'll have a disproportionate valuation than the other 5 who have simply come on this exchange because they're trying to provide a liquidity to the investors and nobody else would invest in them, right? So I think it's a case of demand and supply. I don't think investors are, or at least, markets are driven by institutional investors primarily, and HNIs and family offices and so on. These investors are not naive that they will be driven simply by the ease of listing and therefore drive valuations up.
Quick closing comments from you, Ajay. 30 seconds. How effective do you think this new route will be? And how optimistic are you of it panning out in the manner in which Sebi expects it to pan out?
So I think I'm positive. It's a right step, and obviously a lot more needs to be done. But I'm positive. I think we could see potential deals happen in the next couple of years.
All right. So clearly the banker is positive. Anupam, closing comments from you?
Yeah, look, I think, Ashwin, I think this is sort of what I call the decade of democratization of entrepreneurship in this country from 2010 to 2020. I think this is the time that you're going to see the most value being created by entrepreneurs in this country globally. And so the time for Indian entrepreneurs has come, and they are going to do it just like our doctors and engineers did for the last several decades. The problem is that, look, our best of our talent couldn't do it in India, so they left and they went overseas and they did it. And that, my worry, is something that could happen with entrepreneurs. Entrepreneurs today have role models. They've realized that they have the ability to be the best in the world. So Indian entrepreneurs will create a lot of value in the next several years. There is no question about that. They will be amongst the best in the world. Whether they will do it in India or not is the question. And I think for that to happen, simple easing of listing norms are not enough. I think as the government promised Achhe Din, and entrepreneurs are getting restless to see that, and the impatience, I think, is validated because that's the promise that this government came to power in. So I think we need to step back and look at it more holistically and move quickly to enable an environment which allows companies, high growth companies, recognizes the construct that they play in and provides them a template for growth and ease of doing business in this country.
Our panel believes that the move by Sebi is definitely a welcome step in the right direction, and now the ball is in the court of the investor community and the e-commerce and startup community to tap this new opportunity. Let me now thank both my guests, Anupam Mittal as well as Ajay Garg, for taking out time and joining us on Amicus Curiae this week. Gentlemen, thank you so much.
Thanks, Ashwin.
With that, it's a wrap on this edition of Amicus Curiae. Thank you so much for tuning in. This is Ashwin Mohan signing off. Stay tuned to ET Now for more news and updates.